Hey, what's going on, guys? It's your boy Freddy. Welcome back to the channel. Today I want to go over my WealthSimple dividend portfolio and showcase all of the stocks that I've bought and added to since the last update. Taking a look at the markets over the last few weeks, we can see that the major indexes saw modest gains as the economy continues to chug along with more and more vaccinations being administered. The full reopening is already in the works for many states, while Wall Street bet stocks like AMC saw slightly higher gains. However, here on the channel, I like to focus on more slow and steady growth as I do have the hopes and dreams of retiring off this portfolio. But if you are invested in these momentum type of plays, I wish you nothing but the best and I hope you have those diamond hands. Let's head on over to WealthSimple and see how my portfolio has fared over these last few months. Over the last 3 months, we are up an amazing 5% as we have more than recovered from that mid-May dip that we saw in the overall market. And in this last week, we are up about 0.5% as some of the bigger plays in the portfolio like Tesla start to see some rebounding. This was also a big month for deposits as we saw a nice steady stream of money coming in throughout the month. I've started a new method of depositing funds into the account with a weekly goal of getting about $100 into the portfolio instead of putting in larger lumps of cash in on an inconsistent basis. Early on, I was buying into the market when these larger deposits cleared. However, with the new method of slowly adding into the portfolio, I hope to have a more consistent growth curve as I have a better opportunity to take advantage of the highs and lows of the market instead of dropping larger funds right away and hoping the market doesn't tank. I will continue to update you guys and see how this method fares over the next couple of months and see if I do see an improvement compared to my larger and inconsistent deposits. My goal here on WealthSimple is to buy solid growth and dividend-oriented companies that I know will continue to see decades of success into the future as they have fundamentally sound business models and a history of consistent growth to back them up as well. The goal is to one day live off the dividends and returns that this portfolio sees, so I also completely reinvest the dividends that the portfolio currently produces back into itself to further aid in the snowball and compounding effects that come with being in the market for a long period of time. With the solid additions we are making in the portfolio, I hope to get an average of about $50 per week in dividends from this portfolio. That's $600 a year for simply buying and holding these companies, and that doesn't even include the amazing returns that we have the potential to see. And it just goes to show that even with a small amount of money, you can turn it into something massive with enough persistence and patience. Taking a look at the portfolio tracker, you may notice that it does look quite similar to last month. However, behind the scenes, I am working quite hard on creating an all-in-one high-quality stock and dividend tracker that will hopefully be extremely easy to use and require basically no knowledge of Excel or Google Sheets. Currently, I have quite a few plans for this portfolio, like creating a net worth section where you'll be able to track your overall net worth, including real estate, student loans, mortgages, credit cards, and basically all of your expenses, and you'll be able to manage all of that from just this one sheet. Also, from the investing side of things, the portfolio will have all of the dividend information that you will need for a company and a section showing your overall portfolio growth as well. So stay tuned for all of that, and I should have a working version coming out in the near future. The first company that I want to go over is Algonquin Power and Utilities. This is a utility and renewable energy company investing in hydroelectric, wind, and solar power facility and utility businesses. I'm extremely bullish on this industry as a whole, as I believe the world is slowly turning towards renewables and away from fossil fuels, and I definitely want exposure into these industries for my long-term holdings. Looking at this infographic, we can see all of their major investments, including over 14,000 miles of electricity lines, almost 1 million solar panels, over 900 wind turbines, and 5 miles of water distribution mains. All in all, they have about $13 billion in assets. Over the last 5-6 months, the stock has been beaten down about 15%, which is very substantial, and I've been waiting to see some consolidation before I buy heavily, and I think now is a very good time to add heavily to the company. First quarter earnings are also very solid for AQN, and with the recent 10% increase to the dividend, this company has a lot to offer. Currently, I have about 12 shares at the cost basis of $90.80, and this represents just 2% of the overall portfolio. I was initially buying AQN around mid-April, but I saw that the company continued to see drops and had no real signs of consolidation for quite some time, so I stopped buying. But now it looks like we are closer to a bottom, and honestly, if it does dip any more than where it is, I will simply keep buying as it is an amazing price point to add to the company. I will hopefully like to double or triple my position over the next month or so, and will buy about 4 shares per week to get to that point. The next company in the dividend portfolio that I want to talk about is BNS, not because I'm buying, but because I will not be buying for the foreseeable future. Don't get me wrong, BNS is an extremely solid company and one that I expect to be in the portfolio for decades. However, currently it's not a good buy in my opinion. For For the 3 months ending on January 31st, the company is seeing almost identical numbers compared to 1 year ago. However, the stock is trading almost $10 higher compared to a year ago. It has seen an amazing recovery over the last 6 months from the illness, which I'm very happy about that I was able to catch. However, for the next couple months, I think there are better deals to be had in the market. I think a good add to BNS would be around the $70 to $75 mark, and if we see consistently higher inflation numbers, I definitely think it is possible we will see that price again. I won't be selling any shares or anything, as I still want to take advantage of that amazing dividend, and this is the exact reason why even if WealthSimple had the option for a DRIP, I would not use it. With a DRIP or dividend reinvestment plan, you're simply buying the stock at whatever price it is at instead of waiting for opportunities where the stock is down. By receiving my dividends in cash, I have the ability to better allocate them within the portfolio. For example, using my Bank of Nova Scotia dividends to purchase more Algonquin Power, as that has seen a bit of a sell-off. CNR is one company that I will for sure be adding to this week. I have made a very in-depth analysis on the current state of the company in my top 3 stocks video to watch for June, which you guys can check out in the description. But to give you a quick overview of the company, they have been absolutely destroyed over the last couple months as they are paying billions of dollars over market value for Kansas City Southern, and many analysts and investors are not on board with the company because of this acquisition. However, I believe that this is a very good acquisition for the company, as it will extend their reach into Mexico and allows them a rail system that connects all through Canada, the US, and Mexico. They seem to be consolidating after the recent bottom, and I definitely want to take advantage of a large potential gain that the stock could see. VFV is another company that I will be looking to add to this week. Because it follows the S&P, it has seen a lot of growth over the last month following its recent sell-off. However, I do want to consistently add to this position regardless of the price it's at, as this is a proven dollar cost averaging method that lets you take advantages of highs and lows in the market. Currently, I'm holding about 42 shares of VFE at a solid cost basis of $81, and my goal for the end of the year is to get this position to about 60 shares, which I think is very reasonable, as I want to buy 1 to 2 shares per week every week. And if there's a very big dip in the market, I will add heavily to VFE. I've also started to build out my Ryocan position. I've been talking about and researching the stock on the channel for the last little while and have begun to build out a position in the portfolio. This is a super solid real estate investment trust that offers an amazing monthly dividend. As the country is starting to reopen, this stock offers massive potential as it owns a huge retail real estate portfolio. I've talked in length about my recent thesis on this stock, and I will definitely link that down below. TELUS is one stock that I wish I would have added more to over the last month, as it has been ripping through all-time highs and now sits at quite a rich valuation. I was buying quite heavily a couple of months ago. However, currently I have no plans to add to this position, as there are definitely better deals in the market, for example CNR and AQN. But it does look like this is due for a pullback, and I would definitely scoop up a few shares anywhere under $26. Currently, looking at the portfolio averages, we can see right now we have an annual payout ratio of about $211, which is alright, but I definitely do want to get this value up quite substantially. My goal is to get to an annual payout of about $600 by the end of the year, and I definitely do think this is possible, as we still have plenty of time left for the year. Currently, the yield on the portfolio is about 1.92%, and this is a bit on the lower end, as the yield is weighed down by the growth-oriented stocks like Tesla, Jumia, and Palantir, as well as my large exposure to QQC, which has just a 0.5% yield. However, I am fine hovering around the 2% mark, as I am still in the early phases of investing and have a long-term time horizon before I start to rely on this portfolio, and it's not that big of a deal, as I'm not that risk adverse at the moment. If I was going to be drawing down from the portfolio, however, I would want to be far more cautious and would want to be closer to 4% for the yield, with less growth-oriented stocks and far more dividend and fundamentally strong companies. That way I could rely solely on the dividends and not even touch the portfolio's principal investment and let it continue to grow and grow. Well, that has been the update to my WealthSimple dividend portfolio. Let me know what you guys think of the portfolio down in the comments below, and let me know if you would make any changes or if you have any critiques, as I'm always trying to best utilize my capital in top Canadian companies. So if you guys do see any areas of weakness, for sure let me know down below, and I will of course check it out. Thank you guys for watching. Remember to hit that like button and subscribe for more investing videos like this, and I'll catch you guys in the next one. Take care.